What's up everyone, my name's Robbie, this is Robbie in Manila, and today we're talking about the best mid-cap dividend ETF. Maybe you're trying to create a diversified portfolio and you have a bunch of large cap dividend stocks, maybe even some small caps, and you want to find some dividend stocks but you don't feel like finding them. Well, you could go ahead and get a mid-cap dividend ETF, or there's a lot of different reasons why you might want to use a specific type of ETF. So whatever the reason is for you today, this is what we're going over. Two big criteria I had for this list today are that these ETFs had to have yields of at least 2.5%. So it's 2.5 to 3.5% are the dividend yields on these ETFs. Of course, these should have some decent capital appreciation as well. And also, I wanted to make sure that these ETFs had at least half of their distribution in mid-cap stocks. So some of them have some large cap and some small, but mostly these are mid-cap oriented ETFs. So we got another good video for you. I hope you stick around. Let's go ahead and let's get started. Thanks everyone so much for watching. I do want to remind you, I'm not a financial advisor. This is not financial advice. This is just my opinion. And let's face it, I am not right 100% of the time. So please do your own due diligence. All right, let's go ahead and get started. And please, if you're interested in supporting my channel, I got some affiliate links below. If you want to sign up for Barron's newspapers subscription, I have a link down there. So there's a lot of different interesting things. Take a look at the description below and also do the like and subscribe thing, so appreciate that. This is what I have for today's ETFs. We have the SPYD Dow Jones REIT ETF. RWR is the ticker on this one. This is a real estate ETF, so this is the only real estate or REIT type ETF we have here. Then we have RDIV, which is the Invesco S&P Ultra Dividend Revenue ETF. Then we have SPYD, which is the SPYD Portfolio S&P 500 High Dividend ETF. And then we have DVY, which is the iShares Select Dividend ETF. If you watch any of these videos before, you know the first place we go to is the expense ratio. So what is the expense ratio of these different ETFs? So we have RWR with a 0.25% expense ratio, also known as 25 basis points. We have RDIV, which is a 0.39% expense ratio. SPYD with 0.07% expense ratio, and DVY with 0.38% expense ratio. So off the bat, SPYD is much cheaper than these other ETFs. So the other ones aren't very expensive in relative terms. Of course, there are mutual funds that charge over 1%, right? So, but in general, we want to say, is this SPYD? Is it that much worse than these other ones that you wouldn't want to invest in it? Okay. That's what we're starting off with. So we want to talk now about the weighting scheme of these ETFs. So we have first, the RWR is market cap weighted. So this is based on the largest companies are going to have the largest weighting in this portfolio. Then we have revenue. So RDIV is actually weighting it based on revenue. So I didn't look deep into this one, but what I'm assuming is they're going to take the highest revenue growth companies maybe, and they're going to weight them the highest in this. And they're using the S&P 900 Dividend Revenue Weighted Index. So they're getting not just the S&P 500 stocks, they're getting more access to more stocks when they're doing this. Then we have SPYD. SPYD uses the S&P 500, so only stocks that fall within the S&P 500 are going to fall in this. And then the High Dividend Index. This is actually equal weighted. So these are only going to invest, every position in this is equally weighted. They're going to invest the same exact weighting of the portfolio in each of them. Then next up we have the DVY, which is weighted on dividends. So what I'm assuming on this one is that they're taking all the different stocks that pay dividends, and then they're going to use the DJUS Select Dividend Index. That's the underlying index, and they're probably going to string them from highest dividends to lowest or something like that. That's what some of these do. I didn't look deeply into the actual weighting schemes of all of these, so you might want to take a look at that a little bit more, but those are those. Next up, we have yields. Of course, this is probably one of the more important ones for you if you're a dividend investor, if you're looking for yield, if you want income. So we have RWR with a 2.67% distribution yield, RDIV with a 3.14% distribution yield, SPYD with a 3.56% distribution yield, and DVY 2.93% distribution yield. So the lowest of these is actually RWR, and then the highest is actually SPYD. Pretty big difference between RWR and SPYD, almost a whole percent. So I would say it's significant. RDIV a little closer, you know, and then DVY is almost a 3% here. They all pay quarterly dividends or distributions. Let's get everyone's favorite part, which is the returns of these different ETFs. Now I'm going back about 6 years here, and I'm going to take a look and see what's going on. So SPX is the S&P 500 index. So I wanted to just show you how these have compared to the S&P 500 index. Mid caps, of course, are smaller companies, and they've not done as well as the general S&P 500 index, which has more large companies in it. So for that reason, you're going to see that these probably are not doing as well as the S&P 500 over this time period. So what we have percentage-wise is a 98.58% return for the S&P 500. Then we have DVY with 86.0. We have RDIV with 83.7, SPYD 75.84, RWR really lagging behind at 46. So I'm going to say so far I do not like RWR, I don't like the distribution yield that much, and I don't like the returns. So that's based on the past 6 years. Let's go to the past 3 years. So the past 3 years, RWR is getting closer, but still not that close to, like, say, SPYD being 27%, and DVY being the highest again is 36%. Again, the S&P 500 outperforming all of these. Now we take a look at the 1 year, things get a little interesting because we know that there's it's essentially a different market than it was a few years ago, right? So right now we have the SPX, the S&P 500 doing the worst of these over the past year, down 1%. RDIV is then 5% up, DVY is 7% up, SPYD is 9.5% up, and then you got RWR doing the best in this shorter term period, which is 12.64%. Last thing I want to do is take a look at the year-to-date return. And so year-to-date, we have SPYD leading, RDIV is next, DVY is next. RWR actually is not doing that well this year so far. So very interesting, actually. RWR is all over the place. It was the worst. It was the best in the 1 year. It's almost the worst in the year-to-date now. So what's going on here? I definitely would say that I like these three are okay. I'm liking SPYD so far for a few reasons, which I'll go over in a second. And DVY I'm liking as well for its returns, actually. It's been in the top 1 and 2 in quite a few of these different periods. Now, this is a very important part. We want to know how the weightings of these portfolios are, because if you're really looking for only mid-cap, these aren't pure mid-cap ETFs. They don't have only mid-caps. So we have medium-sized companies. RWR is 52%. RDIV is 50%, SPYD 54%, and then DVY is 50%. So you're getting the majority in these mid-cap companies, right? Medium-sized companies, but 100% of the portfolios are not in those. Now, the highest weighting here is the SPYD, which is 54. There's no small and micro, but there is large and giant. So this is going to be weighted more towards larger and mid blend. DVY is going to be more of basically a blend between small, mid, and large and giant. So it's just got a bit of small in there as well. Let's talk about the sector weightings, because I do think this is important, because I do care about different sectors right now with what's going on. So let's talk about the sectors I like. I like energy. So energy, RWR is no energy. It's all real estate. RDIV, 5.8% energy. SPYD, 14% energy. I like that. DVY, 7.7% energy. Another one I like is financials. So, of course, RWR doesn't have financials, but RDIV, 16.9%, SPYD, 16.1%, DVY. So DVY is a little bit more weighted towards financials. I think another one that's important right now to highlight is utilities, because utilities are really more resilient in times like these in bear-type markets. So utilities right now, RDIV is 34%, SPYD 18%, and then DVY is 26.4%. So I think if I was going to say which of these portfolios I like in terms of just sectors, I like SPYD and DVY the most. I'm not going to go through all the different holdings, but you can pause it here if you do want to take a look at the holdings of these different ETFs. So right here, these are the top 10 holdings. And so here we go. This is my answer to what I think the best mid-cap dividend ETF is. So I'm going to go with SPYD. It was a close call for me between SPYD and DVY, so a few things that kind of got me over the hump here were while SPYD had lower returns over, like, say, more of the return time periods that we looked at, I think DVY outperformed. But I do like that SPYD does have a higher dividend yield, or distribution yield. It's got also a lower expense ratio at 0.7% versus 0.38%, which I think is pretty significant. And I also did like the sector weightings of the ETF. So all in all, that's what I'm going with. SPYD is my favorite mid-cap dividend ETF. So let's go ahead and let's go over some technical analysis of this ETF. Now look, I know a lot of you probably at the end of the day, you don't really care that much about technical analysis on dividend ETFs, especially mid-cap dividend ETFs. But at the end of the day, it's kind of fun to do the technical analysis, look at the charts, see what's going on. And I think some of you do appreciate this, so that's why I always go through it. So a few things to look at here. We're going back until about end of 2019 in this chart. Now, what's very interesting to me is that, first off, really big slope and an uptrend channel. So that was, of course, a great time to be in this ETF and generally be investing, of course, like a lot of stocks at this point in time. We're on a bull run, right? So that was good. But then what's interesting to me is that this thing is still within an uptrend channel, of albeit not as high a sloping uptrend channel, but still it's in an uptrend. Unlike a lot of stocks right now, which if you looked at the S&P 500, for example, probably more in a downtrend at this point, and this is pretty much holding up. I wouldn't say it's like retraced too much. And so what this is probably a good indicator of, let's say, is that mid caps, I think, are going to have a better time than probably large caps this year. That's what I would say. That's kind of my thesis. So I do think mid caps have a decent argument to be in right now. Now let's take a look and zoom in a bit. So really what we have is we have a 50-day moving average, this blue line. It may be acting as some support area for this candle right here. Now it did break down through it a bit, and so we'll see if it actually breaks further, and if it does, maybe this is not going to act too much as support anymore. But then you have the 200-day simple moving average right here, right where the basically the uptrend channel line is. So this is the uptrend line, so we're looking potentially, if it does come down further, maybe it hits around this area, which is in the 40s. So this would be, if we took a little, let's see what that would be. That would be around a 4.2, well, let's say 4 to 5% decline if that was to happen. So, this thing might come down a little bit if it doesn't hold in this area. I'd say in terms of RSI, it does look like it's continuing to decline here, and it's not quite in the oversold area. So I think it does probably have further to go based on RSI. Same with MACD. I don't think MACD is telling me much about any bullish indicators, right? So I do think these two together are kind of giving me some bearish signals. So this probably, if I was going to project out, is going to probably go down to this uptrend channel line here. So that could be a good time to buy this stock. So anyway, that's those are my thoughts. If you like this video, hit the like button, please subscribe to see future content like this, and please watch another one of my videos. It's coming up on the end screen right now.